Thank you so much, Aditya Bhaiya. Request the console to take this pen drive to the laptop so that Vivek ji can go ahead with his presentation. And in the meantime, would like to take the permission of three speakers, experts, because I was listening to that particular subtle query with respect to valuation of land 50C and accounting there too. I am a big zero with respect to taxations comes, but audit accounts, yes, of course, that is the 4-day. Just a food for thought, because all of us are heading for a weekend, and if we can think on these lines, especially I request the permission of Sanjay sir, and this is the student in me, I would like to place this. Any transactions to get recorded, it has to be of economic transaction. And economic transactions has to be recorded at a transaction value. And the value is a consideration which has a cost, which needs to be settled with cash or in kind. And in terms of taxation, there are certain valuations which are not either the cost or consideration. So with respect to, there are ad valorem in customs also, there are valuations in GST also with respect to bank guarantees, there are valuations to discharge GST. Similarly, income tax, there are dimming cost where in valuation comes in place. So while recording certain transactions, either has to be a cost and consideration. Whether if it is not cost nor consideration, because cost and considerations are both sides of the single coin, then can we term that value either as a cost or consideration and go for recording. So with this note, let's welcome Vivek ji for taking us through on the capital gains with respect to new income tax 2025. Vivek ji.
Good evening. Shri Aditya Maheshwari ji, Secretary EIRC ICAI, Shri Sarkar, Treasurer, Sanjay sir, and good evening once again to all the members who are there yesterday also and today also to learn this new Income Tax Act 2025. Along with all of us speakers, because we are also learning. So the moment I got a call from EIRC that one speaker, there is a medical exigency and I have to speak on capital gain. What I did, I told my office that you make the presentation, and I sat with my book 61 and 25, and whatever I could grasp, because Aditya ji has taken us through clause by clause, section by section. But I thought rather than go clause by clause, at least just an overview, and in my view, what are the changes in the capital gain space, what I could prima facie gather from reading two acts together, first this, then this, and also recollecting what has happened in the budget, plus certain cases of the Honorable Apex Court, which in my view may change the litigation landscape going forward in Income Tax Act 2025 also. I thought to gather all of that and maybe take a session on this capital gain. So, friends, first of all, capital gain as of now is from section 45 to section 55A, right? So in the new Act, 2025 Act, it starts from section 67 and it ends at section 91. So around 24 odd sections of capital gain, 67 to 91, right? So let us first, because there are few changes which we'll discuss about, and again, these are my prima facie views. All of you have dealt with so much of, these provisions over the last 50, 60 years. Now, we will continuously discuss, sometimes debate also, whether these views going forward, what would be the positions. But most important to understand is these new sections vis-a-vis the old section. So whenever we read the new section, we should automatically remember the old section, then we get a little more comfortable with the new act also. So section 45, which is the charging section for capital gain, that now is the new section 67. This is the charging section. Now then, capital gains on distribution of assets by companies in liquidation, that is section 46 currently, new section 68. Now very important in this budget and from Finance Act number 2 of 2024, this buyback provisions. We all know, we all got a shock of our lives with the new buyback provisions, which have now been withdrawn to an extent in this Union Budget 2026. Now that impugned section, I would say section 46A of the current act, that becomes section 69. So section 69, before even becoming operative from 1st April 2026, that has gone through an amendment in this Union Budget 2026, right, which will be enacted by Finance Act 2026. So from 1st April 2026, we will have a amended section 69 on day 1. Similarly, the buyback provisions for the purpose of deemed dividend. As of now, it is under section 2, subsection 22, clause F. In the current act, it is under section 2, subsection 40, clause F. So even before coming into operations, this section 2, subsection 40, clause F, that is actually withdrawn, right? But mind that yesterday also we discussed in the transitional provisions that there are, and if you go through this finance bill, you will see that there are many amendments which is there only in 1961 Act. There are some amendments which are only there in 2025 Act and some amendments which are there in both. So this buyback provisions, as you know, this is there only in 2025 Act, right? So current 46A, no change, right? But buyback provisions from 1st April 2026 for the tax year 2026, they are being amendment. We'll go through the amended provisions also. They have given a table like it is the norm in the new Act. Section 47, transactions not regarded as transfer, now becomes section 50, right? Withdrawal of exemption in certain cases, 47A, that becomes 71. Computation section 48, which we have used since so many years. So 48 becomes new section 72. Right now, we were referring to in that section 50C example on the cost of acquisition, right? So this is 49, as Sanjay sir has said. Now the 49, it becomes 73. So for the actual cost with reference to certain modes of acquisition, 49, it becomes section 73. So what Aditya ji was referring on whether the deemed additional cost of acquisition, whether that is can be considered as a cost, that is now under section 73. There is a table, right? If you go through that table, it's there, like it is there in 49. Special provisions for computation of capital gain in case of depreciable assets. So here I have my view, again subject to presentation before this August gathering. Here there is, in my view, there is some change, right, in position, in the tax position. So for depreciable asset, the current section 50, it becomes the new section 74. Cost of acquisition for depreciable asset, section 50A, it becomes section 75. Market linked debentures, special provision for computation of capital gains for MLD, for 50AA, it becomes 56. Slump sale, age old, section 50B, it becomes section 77, right? Here also, in my view, there are certain changes. 50C, which we were talking about, it becomes section 78. Special provision with respect to transfer of share other than quoted share. 50CA, it becomes 79. Fair market value deemed to be full cost of acquisition. In certain cases, 50D, it becomes 80. Advance money received, these are seldom used section. Now, a section which you use very often, section 54, that becomes section 82, right? So you will not use section 54 now for the exemption. Now it becomes 82. For agricultural land, etc. transfer, that exemption 54B, it becomes 83. 54EC, that is again used for investment in bonds. 54EC, here also in my view, read with this depreciable asset, there is certain change which I would present over here. So that becomes 85. So that bonds, investment in bond, 54EC, it becomes 85. Capital gain on transfer of certain capital assets not to be charged. So 54F, again very frequently used, now it becomes 86. 54G, GA, 54H becomes 87, 88, 89. 55, 55A becomes 90 and 91. So this is the just a summary of all the new sections. Now we'll go one by one, to the extent, I could find certain differences, and to the extent over the last 2-3 years, whatever has evolved in the litigation space in income tax. So section 67, this is the charging section. I'll just read the subsection 1. Any profits or gains arising from transfer of capital asset effected in a tax year shall, save as otherwise provided in 82 to 89. This is 54 to 54H, so to say, shall be chargeable to income tax under the head capital gains and shall be deemed to be the income of the tax year in which transfer took place, right? So this is the charging section. Earlier it was 45.1, now it becomes 67.1. Now I will draw your attention to, there are two tables on your screen. Now I am sure you can comprehend on the left and on the right. Left is the new section and right is the old section, right? So I have, in my office, we refer to this kind of thing so that both can be read at the same time. So I will draw your attention to 67.12 and I will kind of start from where I stopped yesterday on the transitional provisions. So 67.12, it talks about enhanced compensation in case of compulsory acquisition, right? So yesterday we went through a section on transitional provision, the repeal and saving section, 53 to F. Right? So what that said is, in case there is a certain exemption which you claim in the current act, right? We discussed with an example yesterday. If you claimed an exemption under section 54, right? You put the money in your capital gain account scheme with a commitment to invest it for purchase or for construction of a new property within 1 or 3 years, right? And you violate the conditions thereto, you do not purchase the property or construct the property within 1 or 3 years, then what, in that year, in the head similar to the current year's head, capital gain, it will be taxed in that year. Say tax year 27-28, you violate the conditions, or 28-29, you violate the conditions, then in tax year 28-29, it would be taxed in the same head, that is capital gain, which it is taxed today, right? Now, while they put in the violation clause, if there is a violation, then what to do? But for others, what about enhanced compensation in case of compulsory acquisition? There is no violation out here, right? So, if you receive a compensation today for compulsory acquisition in assessment year 26-27, previous year 25-26, you get a compensation and you offer it for taxation under capital gain, right? And reduce the cost of acquisition, etc. But say in tax year 28-29, if you get a enhanced compensation, if you get more money from the government, then where do you offer it for taxation? So in this Finance Act, while here this is the observation of the Select Committee that everything is fine. But in this Finance Act, I'm sorry, I rectify myself, it is section 536(2) clause H, not F. So in this 536(2)H, in this union budget, they have rectified it. On your screen, there is the new 536(2)H, apropos clause 107 of the Finance Bill, where they have added these or any other reason, right? So where any sum has been allowed as a deduction or has not been included in the total income of any person, either on account of fulfillment of certain conditions, that is section 54 example, or for any other reason, this is the enhanced compensation, right? For any other reason, if it has not been added in the income, for the tax year beginning before 1st April 26 and any sum was required to be included in the total income of any subsequent tax year, including beginning on or after 1st April 26 under the repealed Income Tax Act, if it has not been so repealed on account of violation, violation is there, we discussed yesterday 54, or for any other reason, then such sum shall be deemed to be the income of the subsequent tax year, in my example 28-29, included in the total income of the said person under the same head of income as it would have been included under the repealed Income Tax Act, that is capital gain, right? Now, capital gains on distribution of assets by companies in liquidation, this is the same. If the company distributes the assets during liquidation to the shareholders, it will not be treated as a transfer in the hands of the shareholder. So this is same. Section 69, capital gains on purchase by company of its own shares or any other specified securities, right? This is buyback, right? Current section 46A and the new section 69. So 69, the current section 69, it has subsection 1, 2 and 3. So 1 remains, 2 and 3 go, they become 2 now, right? I will bring you to the new section, right? So this is the section. So what was the amendment in Finance Act number 2 of 2024? It was that whatever money the shareholder gets in terms of the buyback transaction, that would be treated as deemed dividend under section 222F, right? Also, the cost of acquisition of those shares, that would not be allowed as a deduction from that deemed dividend. And subsequently, if the balance of the shares are sold, then it would be allowed as a deduction in that computation, long term or short term, right? Same 46A that was brought under section 69. So what they have done, now they have deleted this 2 and 3, subsection 2 and 3 in this budget, and they have replaced it with a new subsection 2. So I will just read out before we go to the with an example. If a shareholder or holder or any other specified of any other specified securities receives any consideration from any company for purchase of its own shares or any other specified securities held by shareholder or holder of other specified securities, then subject to the provisions of section 72. 72 is what? The current section 48, computation. The difference between the cost of acquisition and the value of the consideration so received shall be deemed to be capital gains arising to such shareholder or the holder of specified securities as the case may be in the year in which the company purchases the shares or other specified securities, right? So now this prevails. This is the normal buyback position from 1st April 2026, that in case of buyback, whatever money you get, your cost of acquisition will be deducted. Now, subsection 2. Now, the new subsection 2. In respect of capital gains referred in subsection 1, where the shareholder or holder of other specified securities is a promoter. This is the new provision for promoter. The aggregate income tax payable on such capital gains shall be the income tax payable on such capital gain in accordance with the provision of this Act, and an additional income tax in respect of capital gains specified in column B of table below, computed at the rate specified in column C or column D of the said table. So this is the table which is given in the new section 16(9). So, you know, in this finance bill, they said that in case the buyback is done by a promoter, if that promoter is a company, then there shall be an additional tax to make the total tax as 22%, and if it is other than a company, then 30%. The promoter is other than a company, then 30%. So how do they do it? So in case this buyback results in a short-term capital gain, then in case the promoter is a domestic company, then he would be charged 20% on the short-term capital gain. He will be charged additional 2% because he is a company. In case he is not a company, then he will be charged additional 10%. In case it is a long-term capital gain, in case the promoter is a company, then 12.5 plus 9.5. And in case he is non-company, non-domestic company, then 12.5 plus additional 17.5. So this is how they have proposed in the new section 69 and inculcated the new buyback provisions. Why? Additional 9.5. Here? Yes. 12.5 plus 9.5. No. If it is short term, yeah, whether it is short term or it is long term, 22%. This is what, you know, the memorandum also explained. For promoter. In case you are not a promoter, then you go under 69(1), right? Then you pay the normal capital gain short term or long term. In case you are a promoter, then you go under 69(2) and you pay additional tax. Will be allowed now. Yes, cost of acquisition is allowed. Yeah. But, yeah. Yeah, promoter also they have defined here. So this is a new definition. In case promoter means promoter is defined under 269 of Companies Act or 18 of 2013, a person who holds directly or indirectly more than 10% of the shareholding in the company. So again, now you have to go into this definition 269 of Companies Act, right? Again, that position needs to be seen. Frankly, you know, you have a, Sarkarji is not here. He is more of a Companies Act expert. we have to further see the Companies Act, because frankly, that is not my forte. Okay, section 70. This is the current section 47. Transactions not regarded as transfer. So here, again in the last 1 hour, as I was reading, whatever, what litigation space has prevailed and what we have represented also to the ministry, that kept on going in my mind. And, so I thought, let's see what is the change in position. So very recently, there is a Supreme Court judgment in the case of Orient Trading, right? So let us understand the context of this. First, let us understand the section 70, subsection F, that is the same position in 47(7). 70F says, the provisions of section 67, that is the 45, capital gains shall not apply for a transfer by a shareholder in a scheme of amalgamation of a capital asset being a share or shares held by him in the amalgamating company if the transfer is made in consideration of allotment to him of any share or shares in the amalgamating company, except when the shareholder itself is the amalgamated company and the amalgamated company is an Indian company, right? So let us understand by means of an example, in case you have an amalgamation, right, and you get new shares. You are a shareholder. You are a shareholder of company A. I will take you to this. These are all the same. I have found no change in this. Okay, so A amalgamates into B. You are the shareholder of A, right? And you as a shareholder of A, because A amalgamates into B, you get the shares of B. And the market value of the shares of B is more than the market value of the shares of A as of now. So if you apply section 70F, it is very, very simple that the new shares which you are getting of the company B, the value of those shares will not be taxable, right? It will not be considered as a transfer. Now, in the Honorable Supreme Court was faced with a case in this Orient Trading company, where the department considered these shares as stock in trade, right? So, if these shares are disclosed as stock in trade, or by any means the department can prove that it is a stock in trade, then what positions remain? So whenever, now I talk of Income Tax Act, I always keep in mind this section 28 subsection 4. Yesterday also we were discussing apropos this TDS under 194R. Now it is new section 26. So the increase in the value, if the value of shares of B is more than the value of the shares of A, then the increase in the value of the shares of B over and above the shares of A, whether it will be considered to be as a monetary or non-monetary benefit or perquisite or not, right? So what is the current position which we take in case of amalgamations, even if it is stock in trade, right? Even if my shares are stock in trade, that these shares cease to exist, right? The shares of company A that cease to exist does not amount to sale or exchange. An increase in the value of the shares in the amalgamated company, that is merely notional, and notional income shall not be taxable until and unless there is a deeming fiction, right? A current status of affairs after this Orient Trading judgment, and which was upheld by, in one of the tribunals, is that this may be taxable under 28(4), right? Because it might be considered as a benefit which is non-monetary. And in business profession, the question again comes on the timing. What is the timing of this? So, 3-step fact-based test, whether you have existing shares as stock in trade. Now, this is for the department to prove and you to contest. The new shares shall have definitive and ascertainable value, and the taxpayer can immediately dispose of. So, the day when you actually get the shares, all these 3-step factor-based tests are done, and therefore, the current 70F and the earlier 47(7) or 6, that may not come to your rescue. This is the new, one of the tribunals. They have relied on this judgment and in this Supreme Court case. So this position still remains the same in this new Income Tax Act also. Withdrawal of exemption in certain cases, this is the same. Section 72, this is the current section 48, mode of computation, right? So, by and large, this is also, there is no change in this. By and large, this remains the same. Now, actual cost, this is what we were deliberating right now in this 50C example. So, this is the clause, I think, this clause 17 on your screen, if you can see, capital asset being property where the capital gain arising from the transfer of such property, the value of which has been subject to the income tax under section 92(2)(m), right? The value taken into account under section 92(2)(m). So possibly this is that entry which we were discussing right now. Section 74. Now, this section 74 is special provision for computation of capital gain in case of depreciable asset, right? So, depreciable asset, you all know, in case of your businesses and PGBP, a depreciable asset per se is a long-term capital asset, right? However, for the purpose of current section 50, and the new section 74, if you see highlighted, such excess, if you sell a depreciable asset and subject to your block being 0, etc., such excess shall be deemed to be capital gain arising from the transfer of short-term capital asset, right? So, if you sell a depreciable asset and subject to the fact that the value goes beyond your total block value plus current acquisitions, etc., then the gain which arises would be considered as short-term capital gain, right? Now, in case this gain is less than 50 lakh rupees, then you have an option. I am taking you directly to section 54 EC. You can invest in certain bonds. We will come back to 75. This is something which I found, again, subject to all the members, in case you have dealt with, and whether, this understanding what I have on the changed position is correct. So section 85, this is apropos 54 EC currently, right? See, 54 EC says, where the capital gain arises from the transfer of a long-term capital asset, and if you invest the proceeds, right, in the bonds under section 54 EC, then you can claim the exemption, right? So the capital gain should arise. Which capital gain it is not saying? From the transfer of a long-term capital asset. Your capital asset should be long-term, right? See section 85. It says where an assessee has long-term capital gain. It has not, in my view, there is a change of position, right? So now, why So we used to take a position under 54 EC that, see, only for the purpose of section 50, that asset, a depreciable asset which is a long-term capital asset, only for the purpose of section 54, section 50, it would be considered as a short-term capital asset, right? But actually it is a long-term capital asset, and therefore for the purpose of section 54 EC, sometimes we used to take the position, and there is a Bombay High Court ruling also. Very soon I was searching because I remembered that there is some ruling in that. So in case of ACE Builders, which upheld this position, that yes, you can still get the exemption under this section 50, deduction under 54 EC. Haji? So software did not allow you capital short-term, long-term in 87A also, right? Even in 2024. But then finally they upheld. So, good, when we are talking about CPC, so I was with one of the software developers for Ministry of Finance. They were entrusted with this task. So the tax head, who somehow knew this space, he said, अरे पता है, अब हम लोग को लगता था CPC में एक आदमी बैठा हुआ है, right? कम से कम एक तो कमिश्नर है वहाँ पे, but actually there is nobody. It is a black hole, right? So it is a software. Finally, you have to contest in case the department wants to contest this. But it was upheld in the case of ACE Builders by Bombay High Court. हाँ, तभी होगा ना, ब्लॉक से आपका ज़्यादा है. हाँ हाँ $40. Why do you think there should be a difference? So logically what you are saying is right, but again let us see the section 50 and the new, which section was it?
Logically what you are telling that can stand, but the act does not specify.
Yeah, so here 74 subsection 2, earlier 51, 1, 2, 3, it says if during the tax year the full value of consideration received, that is 110 in your case, or accruing from the transfer of one or more assets in a block of assets exceeds the total of the following: expenditure incurred wholly and exclusively in connection with such transfer. Number 2, WDV of the block at the start of the tax year, and number 3, the actual cost of the asset falling within the block of the assets acquired during the year. So it just talks of WDV.
सर आप जो बोल रहे हैं वो अकाउंटिंग स्टैंडर्ड में रिवैल्यूएशन रिजर्व के केस में वैसा लिखा हुआ है.
Yeah. So again, जब पढ़ते हैं, बार बार पढ़ते हैं एक्ट को, तो कुछ ना कुछ आएगा. आप जैसे जैसे हम सेक्शन पढ़ेंगे, while we all now are going through कि नहीं same है, but again as we go along this journey, and congratulate all of you and also us, that we have started this journey by reading. So जैसे जैसे अपने और पढ़ेंगे, वैसे वैसे और positions निकलेंगे, और cases आएंगे. We again read the same section 10 times, maybe some new observations come. So 75, special provision relating to cost of, in case of depreciable asset, we have discussed, it is by and large the same. that remains the same. But there is no, I could find out no, change. Same. But I will come to 54 and 54F also. There I have some thoughts, what I could gather. So special 76, which is now 50AA, special provision for computation of capital gains in case of market-linked debentures. By and large, it is the same. Special provision for capital gain in case of slump sale. Now, here, I think many of you would not agree with me in this case, right? I have only one thought which has come to me. So, 3 months or 4 months back, a person from Dhanbad, he came to me, he was a startup. Nowadays startup valuations can go, arise like anything, and investors can want to pay, abysmal sum sometimes. So, kya kiya, that he was a young lad, 21, 22 years. अब उसने एक कोई कोड बनाया, and there is an American investor who wants to pay 6 crore rupees for that code. But there is a young lad, 21, 22 years, he just made a code. कोई ने उसको कह दिया अरे कोड तो बना दिया, बट खर्चा वर्चा के लिए वो एक LLP भी खोल दिया, right? So now this American investor, he said, भाई, you give me the code, but I will not take your LLP. So then, he started seeing कि क्या करे. So the only thing which comes to your mind is, भाई, maximum you can do is go for a slum sale. पूरा का पूरा ही उठा के बेच दो. तो आपका कम से कम, you can get that benefit if your LLP is more than 3 years, etc. Slum sale दिखा दो. बोला भैया, but बोलता है कि he will take only the code, he will not take my LLP or company, whatever he had. See, in slum sale it is all the same. 50B is the same as 77. But they have used a new word. The profits and gains arising out of slum sale, I am reading 77.2. The profits and gains arising out of slum sale involving the transfer of a capital asset being one or more undertakings or divisions owned and held by the SSE for 36 months or less immediately before the date of its transfer shall be treated as short-term capital gain. This word divisions, this is added. Earlier, they have used the word undertaking only, right? One or more undertakings. I have not highlighted it, but you see in the 6th line, they have only undertaking. Abhi ek add kar diya divisions. Although if you go to the definition of undertakings under the demerger definition, you will see undertaking includes divisions also. But in the new act also the definition of undertaking includes divisions, right? So वहाँ भी division, वहाँ undertaking का division, यहाँ एक अलग से division, right? So whether this division, which is not defined anywhere in the act, whether whether this is a new position created, क्या मेरा वो example में software जो code है उसका, वो startup का, whether that code can be treated as a division itself, because this is not defined. Again, this is something not which you do while filing the return. This is the position which you may take, you think of when a case comes to you. Something like this came to me. So I thought कि maybe एक नया position create हो रहा है कि नहीं इसमें, just so thought of discussing this. Section 78, special provision for full value of consideration in certain cases. 50C, we are discussing about it. This is the current section 78. No change in this, in my view. Full value of consideration in certain cases, 50CA for unlisted shares, same as 71 this time, no change in my view. Section 80, fair market value deemed full value of consideration in cases, 50D, my view again, no change in this. Advance money received, that will be considered as value of consideration. That is, there is no change in my view. Same under 81. Okay, 82, section 54 currently, right? We all know section 54 and this becomes section 82. Now, in this, when the ministry wanted recommendations from various associations, our chamber also, we made our recommendations. As of now, it has not seen light of day. It remains the same. अभी क्या litigation चल रहा है last एक दो साल से, which I don't know whether आपके पास वैसा कुछ आया है कि नहीं. We got 1 or 2 calls. कि जी, what happens is I have taken the deduction under section 54 and I have also paid the promoter within 1 year or 3 years as the case may be for purchase or construction. अभी property handover देने में promoter late कर दिया. So there the department is taking a position that this 1 year or 2 years timeline is violated, right? Because you have not got the property in 1 year or 2 years. Same position is there. I was trying to find out in this last 1 hour कि अच्छा देखो कहीं नया एक्ट में कोई नया पोजीशन निकल के आता है क्या. But by and large they have kept it the same. They have utilized the same word, not fully utilized if the amount deposited under subsection 2 in this capital gain account scheme is not fully utilized for purchasing or constructing the new asset within the period specified in subsection 1, then the unutilized amount shall be charged to tax under section 67 as the income of the tax year in which the period of 3 years from the date of transfer of the original asset expires, and the assessee shall be entitled to withdraw such unutilized amount in accordance with the scheme referred to in subsection 2. So, same position, they have used the word utilized. I was finding out whether they have used a new word, then maybe if there could have been a change in position, but it's not there. But again, this 536(2)(h), which we discussed yesterday, now also, that remains. If section 54, you invest an amount in the capital gain account scheme, if there is a violation after 1 year or 3 years, then it will be taxed under capital gain at that point of time. So to the extent of transitional provisions, 536(2)(h) prevails. So this is the dispute not resolved. Okay, so so my office came out with a case also, DCIT versus Kushal Singh, ITAT, Delhi, where the ITAT held in the favor of the taxpayer, and it says that doctrine of impossible performance. The handover by the promoter is not in the hands of the taxpayer, so the relief was granted. 54B, it is the new section 83 for this agricultural land, that remains the same. Capital gains of compulsory acquisition of lands, 54D, section 84, it remains the same in my view. Capital gains not to be charged on investment on certain bonds, 54EC, we have already discussed what I feel there is a change. 54F, new section is section 86. Here also that same, as per 54, that same position remains. Thereafter, same 54G, it becomes section 87. I could find no change. 54GA, it remains 88. I could find no change out here also. 54H, it becomes 89. 55, it becomes 90 for meaning of adjusted cost of improvement, cost of acquisition. And 55A, it becomes a new section 91, reference to the valuation officer. So, in this time, what I could understand is these few changes in capital gain. Overall, I could not find a very, very major kind of change in this chapter as of now. Thank you very much for patient hearing. Thank you to the organizers.
थैंक यू वेरी मच विवेक जी। अगर ये 1 घंटा का प्रिपरेशन है तो इससे ज़्यादा का क्या प्रिपरेशन रहेगा? या Yes, all the PPTs of the EIRC are uploaded on the website within couple of days, and you'll get this particular PPT out there itself. So everything, by virtue of any program of the EIRC, if the speakers gives any presentation, we generally upload it to the EIRC website, as well as we have a YouTube channel where all the recordings also, if recording facility have been made for that particular program, so that gets uploaded in the YouTube. Already ho gaya hai. So that is, it has already been uploaded. So within couple of days it generally gets, so it means our office is getting more efficient day by day. So that is a good part. And I hand over the proceeding to Vishwaranjan Sutarji for giving vote of thanks. Thank you.
Thank you so much, Hattabhaiya and Vivek ji. What to say, 11th hour call to you, but you always been what you are. Thank you so very much, and of course Sanjay ji been throughout till evening, and all the participants. Thank you so much. Whoever are here right now, there are 3 major programs lined up this month. 13th and 14th of this month, we are doing a RERA program which will talk about 360-degree of RERA aspect with respect to real estate business. So please do join us. On 17th to 20th, 17th, 18th, 19th and 20th of this month, we are having audit boot camp. So this is 4 days, 6 hours a day. Audit boot camp, it is tailor-made, specially curated from initiation to conclusion for a small company, non-Indus company, from A to Z, how to do it, how to select samples, how to do the risk analysis, everything will be done on a case study basis. So do join us on that. And on 28th of this end of the month is we are having the bank audit seminar. So these are the 3 major programs we have lined up. And tomorrow being a special day, we are celebrating Women's Day at COE, Kolkata, Newtown. And one special guest will be here, will be going to be with us, is Squadron Leader Sibangi Singh, who is the first Rafale pilot from the country. And she'll be with us tomorrow. So please join us at Newtown COE with us so that we can celebrate Women's Day tomorrow. And for this program, I'll be failing in my duty if I don't recognize the contribution and curation of what Aditya Bhai has done, because this 2 days, entire session by session, minute to minute has been curated by Aditya Bhai. For that, I request the office to kindly hand over the token of our gratitude to Aditya Bhai, because this is something I need to do. Though it is not required, he will not ever insist, but this is something we should do. Please. Vivek ji, if you can join us. This is the instruction from the chairman. And this is 1 second. Because the gratitude always remains a gratitude without valuation. So thank you so much. Have a wonderful weekend. Thank you so much.